Your direction is more important than your speed. So hello and welcome. I'm your host, Dr. Ruby Gill, and I feel privileged to extend my warm welcome on the behalf of lovely professional university. So attendees, you all might be wondering why we all are gathered here virtually. So we are here to witness an incredible session with our expert today, as he's going to tell us all about intraday trading on stock market. So before we commence, allow me to introduce the expert of the day. Mr. Lalit Bhardwaj, Assistant Professor, Mittal School of Business, lovely professional university. An intellectual personality with an overall experience of 2 decades in industry as well as academia. His expertise lies in mutual funds and banking, as he worked in ICI Bank, UTI, HDFC, and Reliance Capital AMC Limited, and now working as an assistant professor in Mittal School of Business. And numerous students have been benefited under his guidance in this specific field. So, sir, it's a privilege to have you on board with us today. Thank you so much for joining us. So with equal pleasure, I would like to welcome our admission nominee, Ms. Rachna Bajaj, Senior Assistant, lovely professional university. So attendees, she'll be sharing with you the admission process of the university. You can reach us through website, through phone call, and other various medias. So thank you so much, ma'am, for giving us your valuable time. So with this, we'll begin our today's webinar. So over to you, sir, and looking forward for a great interactive session.
Yeah, thanks, Dr. Ruby, and welcome, Professor Rachna as well. So today's agenda is basically on trading. So the topic is intraday trading, but I will keep it as a trading because being a working professional or being students, it's really tough to trade during the day. So what I'm going to do is I will share the trading, how to trade using some technical analysis and how to make money in quick transactions, that is doing the buying and selling in the stock market. So just give me a minute. Let me share my screen with you. Okay, so I hope my screen is visible. Can somebody confirm, is my screen is visible to all?
Yes, sir, it is visible.
Okay. So if you see, the screen is showing some red and green candles, right? So in technical analysis, that is the analysis of the stock market. Basically, it is done on the price. And let me tell you quickly that these red and green candles are nothing but the price movement of the specific stock, right? So let me mention some stock here, and then we will do little bit understanding and try to understand how the stock market trading can be done using technical analysis to make some money. So let's open the chart of a very popular company into the paint segment, that is the Asian Paint. So you see the chart has changed, and on the extreme right left corner, you will be able to see the Asian Paint name is mentioned here. And now all these candles, they are on a daily time frame. If you see where my cursor is on the screen, it is on the day. Day means each candle, every candle on the screen is representing the price movement during a day. So in case this red candle is telling us that the price went down, and the green candle tells the price went up, right? So red candles means during that day price went down, and green candle means price went up. So price went down means the price opened up here at the top of the candle, and in case the candle is red and the candle closing is here, okay, so price closed here. So price was higher when stock market opened, and the market opening time is at 9:15 a.m. and stock market closing time is 3:30 p.m. So at 9:15 a.m. price was somewhere at 2,955, 2,955. And if I bring my cursor to the bottom, it was 2,865. So around 2,955 to 2,865 tentative. So it is nothing but the 90 rupees fall into the Asian Paint stock price during this day, right? And if you see, there is a cross dotted white line on left hand side and at the right hand side. At the bottom, if you see, the date is also coming up. That is 19th January 23. So on 19th January, price went down. So whenever green red candles are there, they are showing the price closed lower. And the green candles, let's take today's green candle. Okay, so the candle on the extreme right hand side is nothing but a candle representing today's price. So if you look at the bottom of the screen, it is showing Monday 30th January 23. So this is today's candle. Market has closed at 3:30 p.m. So today, green candle means stock price opened. Green candle means opening was lower and closing was higher. That's why it's green. So at 9:15 a.m., the price of Asian Paint stock was around 2720 and it closed at 2765. So 27, 22, 27, 65, almost 45 rupee gain on a single stock today, right? So all these are the candles. Now, the candles, how they help the traders or even investors by making some money. Okay, so many people are interested to make money in the stock market by trading or investing, right? So today I will discuss a few very simple entry level indicators, candlestick patterns that technical analyst uses very frequently to make money in a very short period of time. And let's try to understand, guys. See, we all keep money in bank FDs for 1 year. Okay, your parents, your elder brothers, sisters who are into jobs, everybody is fond of bank FDs. So in case we are putting money in our bank FD, what is the rate of interest in 1 year's FD? If anyone here present can tell, what is the 1 year's interest rate on bank FD? See, bank rates on fixed deposits are hovering between 5 to 6, 6.5%, right? So to get 5 to 6% rate of interest for 1 year, it's a lot of time. So how in trading through technical analysis, the money can be made of same kind of 5, 6% return, maybe 5 to 10% return can be made in shorter period. So let me introduce the very first candlestick pattern that is called the bullish engulfing. Now, bullish engulfing means, so let me use some drawing, like assuming this is one candle, right? This is a red candle. And if a red candle is engulfed by a taller green candle, right? So here, if you see, these are all the candles, assuming this is the red candle. And if a red candle is engulfed by a taller green candle, these two candles are showing the bullish engulfing pattern. Now, what is important before taking the trade or investing into stock market? By using only this simple two candles. So if you look at the screen, so many candles are present on the chart, right? And every candle is representing 1 day's price. So this is 30th January. This was 27th January, because in between Friday and Saturday, sorry, Saturday and Sunday, markets are closed. So only 5 days stock markets are open, Monday to Friday, Saturday, Sunday they are off. So every day's price movement is there. Now, before taking a trade or before buying a stock based on this bullish engulfing, what is required? The requirement is this: there should be a trend, right? What is the trend? Trend means either the stock must be falling for last few days, moving downward, or the stock price moving upward. This is the trend. Now here, like this was the red candle. Assuming previously again there was a red candle. Let me change the color. Okay. Then again previously there was a red candle. Okay. So assuming for last 3, 4, 5 days, 6, 7 days, all these are the red candles. Okay, I'm not able to make the candles like this, which are available on the chart. But okay, so the stock price is opening up, closing lower, opening up, closing lower, opening up, closing lower. So every day price is going down. So that clearly tells there is a downtrend, right? So after a downtrend in the stock price, the last red candle is engulfed by a green candle. That means probably the trend is going to change, because red candles tells price every day going down, and the green candle, which is engulfing the last red candle, is telling us that probably downtrend is over, now uptrend is going to start. So these two candles will be used. Where we will buy the stock? At this green candle stop, whatever is the price. I will show you on the chart. Okay, how after a downtrend, a few red candle, in between there could be green candles, there could be green candle, but overall trend would be down. Okay, so but the last two candles, that means the last red candle must be covered up from the top and from the bottom. Okay, this green candle is totally engulfing the last red candle, and we will buy at the top of this green candle to make some returns. Sometimes it works, sometimes it may not work, because it's not a mathematics, it's a science plus art, right? So every time we are buying, definitely we will make some returns. It's not so. But in case the probability is even 50%, and if you are taking the trade, and if you keep on taking the trade based on this pattern, you will make a lot of money. Okay, so let me remove these drawings, and let's look at the chart where this kind of bullish engulfing pattern was formed, and how the trade was taken, and how much percent returns were made. So just a minute. Okay, so let's move back. Okay, so here if you see, there is a downtrend going on. See my cursor, or let me show you through an arrow. So if you see, the downtrend was there, right? Stock price continuously going down. It was here, red candle, in between some green candles, but gradually red candle means price was down. Okay, so somewhere here at the bottom, in case a green candle would have engulfed this candle, then the bullish engulfing pattern would have formed, right? So let's go a little bit back. Okay, there are a couple of patterns. Let's try to find out this one first, the bullish engulfing. The bullish engulfing pattern would be formed after a downtrend. So a lot of work is already done on my screen. Let me remove a couple of these drawings. Okay. This is also a pattern. I will tell you later, but right now we are interested to. Okay. Guys, here if you see, look at this downtrend. Okay, last 3, 4, 5, 6 days, a downtrend should be there. So one red candle, 2, 3, 4, 5. Okay, at the top this was a green candle. So after this top, you see stock price started to correct. One day it was down, another day, continuously 5 days it was down, and the taller green candle is engulfing the last red candle. Okay, so where we have to buy? We have to buy at the top of the green candle. So let me draw a line here. So top of green candle means when market is about to close at 3:30 p.m. Okay, let me change the color of this line to white line. Okay, so this candle, green candle is engulfing the previous day's red candle. It shows bullish engulfing. Okay, now here we know next day price has gone up. In case I would have hide the chart till here, okay, then it's really tough to know what happened next day. Assuming we know the market has gone down continuously for last 4 or 5 days, then the green candle is engulfing the last red candle. Okay, and I'm buying the stock here. So what is the price of Asian Paint stock here at this candle? This is 3083. So we will buy at the top of green candle. Now there is one possibility as well. In case stock price will not go up, in case it started to come down, we have to exit. Where we will exit? Out of these two candles, whatever is the lowest point. Okay, so if you see, the lowest point is of this, the red candle's bottom. It is the lowest price is 2970. Okay, so lowest price is 2970. We are buying at we are buying at 3083. Okay, so let's see what happened after our buying. We bought here. Next day we will see stock price opened here. So from almost 3083, next day stock price went up to 3086. Okay, and this kind of trade is taken typically for almost 4 to 6 days, right? So 4 to 6 days, whatever gain would be there, we will exit after 4 to 6 days. We can continue in case stock price will keep on going up. Okay, so this was the first day, second day again up, third day a red candle, but we bought here. Still price is higher than our buying level. Fourth day again a red candle. Fifth day there is a green candle. So now assuming we entered at 3083, and on fifth day, what is the price? The price is 3148. So 3083 to 3148. How much money is made? Almost 150, 160, right? So on a 3000 worth of stock, if 150 rupees made, that is almost 4 to 5%, right? 3000's 10% would be 300, 150, 140, 160 would be around 4-5%. So just in 5 days, using some technical analysis, that is analysis of this stock market charts, candlesticks, we are able to make around 4 to 5%. Okay, whatever money you would have invested in Asian Paint, you could buy one stock. Okay, you could buy 5 stock, 10 stock, depend on how much money we are having. Okay, so fifth day we would exit. Let's see what happened next day. It further went up. Okay, so ideally 4 to 6 days is better. So we exited fourth day. In case you are interested, let me hold on to the stock. Let me see what happened sixth day. The sixth day price went up to 3247. Next day, red candle. Still there is no exit signal. Okay, next day price went down a little bit, and then it started to come down. Okay, so when we look back, it seems the best exit level would be this, but we don't know whether the next day there would be a green candle or red candle. So there was a red candle. Still, it's not too low. Okay, green candle, but there was a gap between the price. And next day, price went down. Okay, so ideally 4 to 6 days, in case we are able to make money, that is the best situation using the technical analysis. And we have used nothing, but we have used only 2-3 things. First thing, before bullish engulfing, is that there should be a downtrend into the stock. Stock price must be falling for last 3, 4, 5, 6 days. Okay, so it was down, and the last red candle is engulfed by a taller green candle. Then we have to buy. Where we will buy? At the top of this green candle before market is closing. So market will close at 3:30 p.m. We will buy this stock at around 325 before market close, and just wait for next 4-5 days, and in case we are making reasonable return, we will exit. So on fifth day we made around 4 or 5%. Next day there was a gap and it further went higher, so probably returns jumped to around 7 or 8% just on 6 days as well. So this was the first instance. Okay, let's move back. Let's see further after a downtrend and a bullish engulfing pattern was formed or not. So let's do the back testing. Okay. So here you can say, some downtrend was there and a taller green candle is engulfing previous day's red candle. Stock price went up. Let's try to find out some other bullish engulfing. So I hope I'm moving my screen. It's visible. The movement which I'm doing on the screen, I think it's visible to all. Okay, and another important thing is this, that right now we are doing the back testing on Asian Paint stock. There are almost more than 7,500 stocks listed in the stock market. So it's not so that every day we have to look at only one chart. You can identify your favorite 10, 15, 20 stocks or even 7,000 stocks are there. Wherever you find out this bullish engulfing pattern, you can take a trade. So we have moved backwards, but probably there is no further bullish engulfing candle. That's why I'm saying there are plenty of opportunities. It's not only one stock. Okay. So here again, if you see, there was a downtrend, and at the bottom, a red candle is engulfed by a taller green candle. We will buy at the peak of this green candle. Wait for 4 to 6 days. 1, 2, 3, 4, 5. Okay. So almost from 1580 level to, you can say, 1680 level. So again, 4-5% return quickly in 4, 5, 6, 7 days. Right. So this is the bullish engulfing. And even here, if you see, the trend was downward, and somewhere at the bottom, this red candle is engulfed by a taller green candle. Here, if you see, let me expand the chart. The trend was down, and somewhere at the bottom, a red candle is engulfed, a taller green candle is there. So here we'll buy at the top of this green candle. But with stop loss, stop loss means instead of price going higher, in case price would have gone down. So in case any candle would go below the low point of these two candles, this is the low. In case a candle would have closed below the bottom of these two candles, we would exit with some loss because we are buying here. And in case very next day candle would be formed and closed lower, that means price would be here. So if buying is higher, selling is low, we will suffer a loss. But after this bullish engulfing, what happened? First day, second day, third day, fourth day, fifth day. So we bought here, okay, slightly up, okay. Then it went down a little bit. See, our stop loss is here. Some investors, they don't exit until the stop loss is not good. Okay, they hold on to it. So here, if you see, up and down is happening, gradually stock price keep on moving higher and higher. So in case you hold more than 4 or 6 days, the gradual movement was upward. So in case the price was 1590, and assuming we exited somewhere here 1800, so grossly 1500 to 1800, it's 300 rupees, right? So 1500, 10% is 150, 300 rupees means 20%. So in case we'll count the candles from here to here, we can say around, say, 18, 20, 22 candles. So in 20 days, 25 days, 20% return is offered by Asian Paint only by using the technical analysis of these candlesticks. All these are the candlestick, and on these two candles, a bullish engulfing pattern was formed. So this is a bullish engulfing, right? Another pattern which I want to introduce, which is called bullish thirsting pattern. Okay, what is the difference between bullish engulfing and bullish thirsting? In bullish thirsting, here if you see, the green candle is engulfing the last red candle. The bullish thirsting candle is like this. Okay, let me highlight both the patterns. Okay, so here, if you see, there is an oval. So this is bullish engulfing. And let me highlight another. Okay, these two candles now. Look at them carefully. Okay, these two candles. Here, if you see, only 1 or 2 days the price was down. Then a green candle is formed. It is covering from top. See, this green candle has gone higher than the top of this red candle, but this green candle is not covering from the lower side. Okay, so still this is considered as a bullish pattern. That means stock probably will go up. Okay, because you see a small downtrend of only 2 days, very next day a green candle is formed. Okay, so this green candle would open higher than the close of previous day. Okay, so previous day, let me expand the chart. So this was the opening price of Asian Paint on 3rd April 2020, and it closed lower. Very next day, a green candle formed which opened here. This was the low of previous day. It opened above, higher than the previous day's closing price, and it closed even higher than the top of red candle. Okay, this is called bullish thirsting. It is starting somewhere from the body of the previous day's red candle and closing above the red candle. Okay, here we will buy again at the top of this green candle. Where would be the stop loss? Out of these two candles, whatever is the lowest area, in case the next candle would have formed lower than this, we would exit. But what happened? We bought at say 1622, 1, 2, 3, 4, 5. 1622 to 1742. Almost you can say 120 rupee gain in 5 days. Percentage wise would be, again 4-5%. You could have hold it longer, 1 or 2 days. The price went down, but still, it continuously going up. So it's up to you. In case gradually price is going higher, why to stop? Instead of stopping at 5% return, you could have exited at say around 10% return also. Okay, so very similar patterns, but in bullish engulfing, the green candle must totally engulf the red candle. Okay, candle is basically the wide area. The lines below the candles are called shadows. Even this green candle should cover the shadows as well. Okay, this was bullish engulfing, totally engulfing. Now in bullish thirsting, it will not engulf totally. Okay, from the top, it will engulf. From bottom, it is not able to engulf, but it is closing high. Okay, so two very interesting patterns, and we are teaching this technical analysis here in LPU to our undergraduate students and the postgraduate students. Graduate students who are pursuing BBA, BCom, MBA, MCom, etc. in different specializations, especially the students who are appearing or selecting the finance as a specialization. They are being taught this subject, and they are very happy to learn it because in the very first semester we are teaching this subject. At the end of the semester, we give them 10,000 rupees as a seed money. And there are many students who has doubled their money. 10,000 made 20,000 or even 30 or 35,000. So that is how the students are making money and they are learning practically. Right? So let's look at some other stock now. So instead of Asian Paint, let me change the stock price to some other company. Okay, let's look at say Tata Motors. Okay, now the chart has again changed. Okay, let me fit it on. And okay, let's quickly come to the latest candles. Okay, so extreme right hand candle is today's candle. If you are able to see at the bottom, it is Monday, 30th January 23. Okay, so this is the today's price movement. Now, since it's a red candle, that candle is today price opened higher, closed lower, and these shadows on the top and bottom, they are telling that during the day, what was the highest price? So the shadow, the top of this shadow is telling us that this was the highest price. Okay, top of shadow. And the bottom of the shadow is telling during the day, this was the lowest price of Tata Motors stock. right? And the opening was higher and it closed lower. That's why it is showing. And whenever opening would be lower, but stock price went up, Tata Motors. In case my voice is so, let's see the same bullish engulfing or the bullish thirsting pattern on the Tata Motor stock. So we will move back to do the back testing, right? So this is now different stock than Asian Paint. Okay, let's further move back. So, we have to analyze multiple stocks, then we are able to find the money. After taking the trade, the probability of making money is very good. But the main effort is identifying the stock. Ultimately, we have to find the stock which are giving this kind of bullish or bearish engulfing. So here, if you see this green candle is engulfing the previous day's red candle, but the trend, downward trend is not there. All these candles are almost at the same price. What is important that stock must be coming down. After downward trend, if a bullish engulfing is formed, then we will buy. Okay, let's move further. Tata Motors, no bullish or bullish engulfing or bullish thrusting, it's not visible. Okay, right. So here, if you see, look what I'm doing on the screen. So there is a downward trend for last more than 5, 7, 8 days. Okay, stock every day, red candle, price is going down. So at the bottom, this pattern is, if somebody is able to reply, is it bullish engulfing or bullish thirsting? Bullish engulfing or bullish thirsting pattern? Okay, so here if you see, this is not the bullish engulfing because this green candle is not engulfing the previous day's red candle from the bottom. This is bullish thirsting pattern because it started from the body. This is the body previous day. So gap up, it opened up and it closed even higher than the top of this red candle. So starting from the body of the previous day, somewhere from the body, okay, and closed higher. Where we will buy? We will buy at the top of the green candle. So what would be the top? Let me draw a line at the top of this green candle. And what is the price? Okay, the tentative price is 292, right? And where would be our stop loss in case price started to go down? Our stop loss would be out of these two candles, whatever is the low area. Bottom. So I will buy at this price in case candle instead of going up, it have gone down. Okay, any candle close below this line would be exit from the stock with some minor losses. But again, we bought at say 292 first day, second day, third day, fourth day, fifth day. So we bought at 292 and fifth day price is 299. So 7 rupees on one stock. In case you have bought say 100 stock, 10 stock, whatever, some gain is made within 5 days, right? And if you see the stop loss, this level is not touched for so many days. In case somebody waited that, let me hold my position beyond fifth day, they could have hold it, comes down, try to, touch the stop loss, but then move. So probably here or maybe somewhere here, you could have sold the stock even at a higher gain. Let's look at some other stock, say Wipro. Let's take a stock from IT industry. Okay, Wipro Limited. Okay, this is Wipro and let's move forward. whether any bullish engulfing or bullish thirsting pattern was formed on Wipro's charts. Okay, these are the candlestick charts. Okay, let's see. Okay, here if you see here, okay, let me again highlight these two candles. Okay, these are the two candles, right? Here if you see, there was a downtrend going on in the price for last 5, 6, 7 days. Okay, so red candle in between a green, red. So this last red candle at the bottom is engulfed from the body and closed higher. So again, it is not bullish engulfing because this green candle is not engulfing totally from bottom to top, but it started from the body of the red candle and closed higher. Okay, let me expand. Right. So very first condition, there should be a downtrend before buying. The last candle, either it could be engulfed by a taller green candle totally from bottom to top, or the green candle should start from the body of this red candle and close higher. So this green candle closed higher. Of course, on chart it's visible, it has gone up. But in case we'll try to do this, we will hide the chart. Okay, then it's really tough. That stock is going down. Only one green candle has formed on the higher side. How come a trade is there? Why some indication is there that the stock probably can give us 5, 10, 18% kind of return in short time. So our stop loss would be out of these two candles, whatever is the lowest point. Lowest point is the bottom of this red candle, bottom of the shadow around 390. And we are buying at top of this green candle, not the shadow, the closing price, okay, around 404. So we bought at 404. Let's see first 5 days. First day up, second day further up, third day further up, fourth day slightly down, fifth day further up. So in case, after buying at 404, we are exiting at say 414, almost 10 rupee, 11 rupee gain within 5, 6 days. Next day, it was down. Okay. And one day down, then again a green candle, green, in case somebody would have hold it for slightly, okay, until the green candles will keep on forming on the chart. Okay. And probably say at this day, the price movement was huge. During the day, price went up to 440 and the low of the shadow is 420, right? But gradually, if you see, only after this, we made 10 rupee per stock till here. This was, of course, not good because it is a taller red candle showing price went down. But after that, in case somebody would have not exited here or here, after even that, stock price continued to move down. So somewhere from around say 402, and in case somebody is holding till this point or this level or even this level, 440, 402 to 440, almost 9-10% return in almost 18-20 days. Okay, so that is the beauty of the technical analysis, which is nothing but application of so many things, and this is only out of those thousands things, only 2 things I've shared: the candlestick pattern. And what are the name of this candlestick pattern? Bullish engulfing and bullish thirsting. So we know where we have to buy. We know where we have to exit in case stock price, instead of going up, it started to go down. We would cut short our losses here. In case the stop loss line is not touched, hold on to your trade or investment. Okay, initially 4 to 6 days. In case it still continues to go higher, hold on to your investment and wait until you are happy with 10%, 12%, 13% kind of return in shorter period. So guys, see, if during the year we are able to grab this kind of opportunities where multiple times we are able to make 5%, 7%, 10% return on say a small investment of even 20, 30,000, right? We can easily make on an average around 30 to 50% return in a year. One time you made 5%, another time you made 7%. Your capital is growing. And if your capital will grow, 5-7% will also be the higher amount of our capital, right? So the possibility of gains would be higher. And in case trade would not go in our favor, the possibility of losses would be smaller. So when the possibility of gains are higher and possibility of loss is smaller, right? Definitely the capital will gradually keep on moving. So 20,000 in 1 or 2 years can be turned into 40,000, 40,000 can turn into 80,000, 70,000. It will become more than 1 lakh, okay, 3 lakh, 5 lakh. And as you will get the skill and understanding of this technical analysis, because there are so many patterns and indicators which further sharpen the skills to take the trades, to take the investable or the short-term trading bets to make the money. So very interesting thing which is being taught here in our campus, and students are even practicing it and making the money. So that's it from my side. I welcome in case any questions are there from the audience.
Thank you so much, sir, for your insight and guidance, and your expertise and knowledge is exactly what students needed today to move forward and grow exponentially. Thank you so much, sir. So we have few questions from the attendees. So due to shortage of time, we'll take a few queries. With your permission, sir, we'll take up those queries.
Yeah, please go ahead.
All right, sir. So there is a query from Kiranjot Kaur. She wants to know that which specialization in management will be having a demand in the industry in coming years. So what's your take on this, sir?
See, the demand in the job market is almost for every field. Okay, every company needs people for the marketing and sales roles. Every company needs professionals in the HR department. Okay, there are companies where there is a need for the people who can manage their supply chain, their operational activities, etc. Right? There are companies who need experts or professionals to manage their finances, capital, money, and there are people who are required to help others to make the money, like in mutual funds, stock market, stock broking firm, right? There is the requirement of people to invest and provide the returns to the investors. So guys, it's not so that there is a demand on a specific sector. Okay, then there is the IT field. Everything is going digitization way. There is a huge demand for almost every professional. You need to grab your pie, your share into the job market. So as per your taste and aptitude, okay, we also advise and consult the students which kind of specialization would be better for them. Right? And we take some tests, aptitude test here in the campus from the freshers, and based on their aptitude, the best suitable specializations are recommended. But still, I will say almost every area is in demand in India, because India is still the fastest growing economy in the world.
Absolutely. I completely agree with you, sir. And thank you so much, sir, for resolving the query of us attendees. And with this, I would like to invite our admission nominee, Ms. Rachna Bajaj. So, ma'am, over to you for the admission part of the university.
Thank you so much, Dr. Ruby. I'll just quickly share my screen. Okay, I hope my screen is visible.
Yes, yes, ma'am,
okay.
It is.
Great. So good evening, students. I hope you all are doing fine and safe at your home. So I'll be just quickly sharing that how you can apply for admissions at our university. As sir has already shared a lot of information which can be useful for you while applying for admissions at LPU or in any other university. So if I talk about LPU, what you have to do is just simply visit our website www.lpu.in. And on the top, you can see an icon of admissions. Here we have segregated all the programs as per your eligibility. After 12th programs, after graduation programs, after post-graduation, after 10th programs. I suppose we have students for undergraduate programs. So I'll just show you some of the programs which are available after 12th. Once you click on this icon, you can see all the disciplines which are available at our university will be right in front of you, be it related to management, commerce, economics, engineering, computer applications, etc. So I'll just click on management. And here you can see we have listed down all the honors program, industry collaborative program, specialized program, and other programs. And we'll just go for, let's say you are interested in BBA Financial Market, which is a program which is in tie-up with NSE Academy. So I'll click on this program. And here you can see the duration has been mentioned, which is 3 years with total 6 semesters. We have mentioned the eligibility criteria of this program, which is 60% in 12 with English as a compulsory subject. And you also need to qualify LPU NEST, which is named as National Entrance and Scholarship Test. Once you scroll down, you can see the placement details, the student achievements, the rankings of this program. And apart from this, we have also listed the detailed curriculum for next 3 years. And here comes the another important part, that is the financial, the monetary aspect. As you can see that the fees without scholarship for this program goes 1 lakh per semester, but we have different scholarships on the basis of 12th. Let's say if you score minimum 80%, then you will be eligible for category 3, that is of 20%, and your fees will be reduced to 80,000 per semester. If you score even better, if you score between 90 to 94.9% in your 12th, then you will be eligible for category 2, that is of 30%, and your fees will be reduced to 70,000 per semester. And if you score even better, if you score between 95% or above in 12th, you will be eligible for category 1, that is of 40%, and your fees will be reduced to 60,000 per semester. Let's say if you couldn't score well in your 12th exam, you are only eligible. You also have option to avail scholarship on the basis of LPU NEST. This is the tentative cutoff required to fall in category 3, 2, or 1 scholarship slabs. Once you scroll down, we have listed some other scholarships which you can apply for under this program. We also have scholarship based on innovation, startup, and entrepreneurship. Apart from this, we have some financial aid for serving retired dependents, CAPF, paramilitary personnel, and their dependents. So you can share such information in case anybody is in need of any kind of financial aid. And here, once you scroll down, you can see we have listed down the important dates, which is very important for you guys to follow. As you can see that the registration is going on, and the exam dates will be between 1st February to 10th of February. Today is already 30th and tomorrow is 31st. You can apply for LP NEST exam, which is the first step to apply for our programs. Once you appear for the exam, your result will be declared on 15th of February, and the last date to take admission will be 5th March 2023. In case if you have any queries related to this, we have listed down our contact details. You can get a call scheduled for yourself. You can contact us through our WhatsApp. We have our live video counseling team available for you. You can also take a virtual tour of our university. And down here, we have listed down our helpline numbers. And for your ease, you can see this apply now icon everywhere on the website. You can click here, or you can simply visit our website, admission.lpu.in. Here, you just have to register yourself. In case you have already registered, you just have to directly log in yourself and you will be good to go. So over to you, Dr. Ruby. I suppose I have shared majority of the details which can be helpful for our students to apply for admissions at Lovely Professional University. Thank you so much.
Thank you so much, ma'am, for the detailed information about the admission part of the university. So thank you, attendees. With this, we'll conclude today's webinar. So thank you all for sparing time and participating in the webinar. We appreciate you all for being here, and I believe your knowledge has been enriched by this webinar. Also, I would like to express my appreciation to the experts for their valuable contribution. I'm sure, sir and ma'am, your years of research, your years of experience will definitely help the audience to choose the right path. So until next time, I, Ruby Gill, finally sign off the session. Thank you, everyone.